The number one question from like my grandmother would be, "You're going to be a fool?" I'm sorry, and that's good. How that's a promotion somehow, right? Basically, it's from Shakespeare. The jester or the fool was the only person who could actually be honest to the king or queen without getting their head lopped off. So that's exactly what the gardeners try to do, and now what all fools try to do. They basically try to educate people about their financial well-being in a way that people can understand, and in a way that won't get their heads chopped off, financially speaking.
The first thing you notice about Matthew Emmert is that he kind of looks like Matthew Broderick.
Bueller.
The second thing you notice is that he has a real gift for explaining finance and investments, which is going to come in handy because, well, that's what this video is all about.
Really? My goodness.
The Motley Fool was started by two brothers, just like Matt, with the same passion for helping people understand investing.
Initially, the brothers Gardner, Dave and Tom Gardner, had this sort of foolish philosophy that they wanted to be able to actually help people with their investments in a way that people actually understood. So the Fool got started as sort of a newsletter and kind of a building of a community message board and that type of thing.
Today, besides being a pretty cool place to work, the Motley Fool is one of the most successful multimedia financial education firms in the nation, thanks to its website, newsletters, 5 best-selling books, and nationally syndicated newspaper column. The Fool also produces one of the best radio programs on NPR. Throughout college and afterwards, Matt discovered he had a passion for following the markets and for helping people.
I loved investments in the financial markets. I was a finance major in school.
In fact, his friends even gave him a nickname.
He used to call me the stock doctor in my other jobs. So even without that, it was always just sort of a hobby and trying to help people.
One of those first jobs was working as a broker. For Matt, it was a sobering experience.
I mistakenly assumed in my naivety that being a broker had something to do with financial analysis and research. And there are a lot of fair-minded brokers out there who are going to be cursing me right now. But basically, it was really more about making 300 cold calls a day.
Realizing that the hardcore sales route was not for him, Matt jumped at the chance to work for the Motley Fool, where he could better fulfill his goal of helping people.
People have so many money questions. They have so many money problems, and these things just weigh on people. And even just through the simple answer that you could provide, it just seems to remove the weight of the world off people's shoulders when you give them this little piece of advice, and that's a great feeling.
Okay, now that we've got ourselves an honest broker, no pun intended, to guide us, let's venture out into the world of securities. We'll start with the basics. Securities are investments. Types of securities include stocks, which are pieces of ownership in the company, bonds, which are certified loans made by investors, and mutual funds. Companies sell securities to raise money for things like equipment purchases. Investment bankers take these securities for a price and sell them on behalf of the issuing companies in places called exchanges. The New York Stock Exchange is the oldest and largest and has the most restrictions, but the American Stock Exchange lists more companies since it has less regulations.
The American Exchange kind of got started, interestingly enough, by brokers traders who were participating in the New York Stock Exchange. They actually go out to the curb to trade stocks that didn't meet the very, very strict requirements of the New York Stock Exchange.
The NASDAQ is a fully electronic exchange.
There is no actual physical trading floor for the NASDAQ, although now they have the NASDAQ big board, in the office that you can see on CNBC every morning when they light the board, because they want to have an event that's a nice spectacle for folks, just like the New York Stock Exchange gets to ring the bell.
Stocks can also be traded without an exchange. These are known as over-the-counter stocks. Finally, it's also important to keep in mind that when investing, you choose the stock, not the exchange.
As an investor, you don't necessarily have that much of a choice. If you want to buy GE, for instance, then you're buying a stock that's traded on the New York Stock Exchange. If you want to buy Microsoft, you're trading a stock that's traded on the NASDAQ.
The Motley Fool can help teach you to use indexes like the Dow Jones Industrial Average to understand market trends. The Dow is just the average price of the stocks of 30 major companies. If the Dow is up, things are generally pretty good. The Fool can also teach you the benefits that preferred stock give over common stocks, and which stocks are blue chips, growth stocks, income stocks, and penny stocks. If you're interested in bonds, the Fool can tell you the rating of the bond, which determines how risky it is, whether it's secured by company assets, if it's convertible to stock shares, or if it's a junk bond, which is a high-risk bond that pays high interest. But of course, after all this, you'll still need a professional broker to buy and sell the securities for you.
You're going to have to go to your TD Waterhouse or your favorite discount broker is probably what the Motley Fool would recommend, as opposed to paying $300 per transaction to a Merrill Lynch or someone of the like.
When a company first sells stock in its initial public offering, that's called a primary market, because the company gets the money. Stockholders can then buy, sell, or trade their shares to one another in secondary markets and can make significant profits. If the price gets so high that investors can no longer afford the price of the stock, the company can split the stock, usually doubling the number of shares that are held by the current shareholders, while cutting the price in half. Companies that offer mutual funds buy lots of stocks and bonds and then sell shares in the whole collection. As a general rule, the Motley Fool doesn't recommend most mutual funds as good investments.
Generally speaking, the Motley Fool would recommend index funds over mutual funds, simply because 80% of the mutual funds out there don't actually beat the market. You're paying a marketing fee and you're paying a management fee. You've got to pay that guy to sit in that office and pick those bad stocks for you. So once you add all that up, it's really kind of working against you.
Investors might also buy commodities like gold or textiles and trade in commodity futures, trying to predict what the price of commodities will be at some later date and profiting on the difference. Advanced investors sometimes buy securities on margin, paying only a fraction of the security's value and borrowing the rest from the broker. But if the price drops, the broker can make a margin call, forcing the reckless investor to pony up more cash to cover their loss. To most people, October means the scares of Halloween. To investors, it brings back the memory of stock market crashes in 1929, 1987, and 1997. The first crash was caused by irresponsible companies, so the Securities and Exchange Commission was created to enforce securities laws.
So they're really responsible for policing corporations and individuals, making sure that they're obeying our nation's securities laws.
Today, investors rely on the SEC more than ever.
3 words immediately come to mind. Enron, WorldCom, Adelphia Communications. So I guess that's 4 words.
The good news is that new technologies are fueling innovations across many industries, and that means opportunity for investors. Whatever the outcome, however, Matt is determined that Motley Fools and their money are not soon parted.
Being able to do something that I love, that I'm completely interested in, but also to have the opportunity to write about that every day and reach hundreds of thousands of people and help them better their financial life and get people interested in these same things that I'm interested in, there's nothing better.